All right, this is one of our best attended topics so far. I guess people have a lot of questions about CAM reconciliation. So we're going to get started. So thank you everyone for joining us on this webinar. This is all about CAM reconciliation and cloning, and we have some new exciting stuff to share with you all about cloning for 2026. And we look forward to answering all your questions as we go through here. And Jennifer has kindly made several videos to show that we're going to share here and that they're going to be available afterwards. Plus, we've created also some additional companion guides to help you as well. So with that said, let's get started. I know most of you already know myself. I am Jerry Frank. I'm the co-founder and CEO of STRATAFOLIO. And with me today is someone most of you all do know. You've had the opportunity to work with Jennifer Clark. She is an accountant by trade. She's done some tax work in the past, and she really does know and understand commercial real estate. And she has seen all kinds of things. She is also our director of implementation and helps direct all of the activity for our full service onboarding team. She's also a QuickBooks certified advanced pro advisor and a QuickBooks certified user. So you are in good hands with her as we go through some of these topics today. All right, so today we're going to cover a number of things, including some key metrics that are going to be impacting 2026 budgets. We'll go through quickly what is a triple net lease, remind people how to calculate tenant pro rata shares, some common CAM mistakes that we see based on all of the clients that we've worked with over the years. Then we're going to show you how to do CAM reconciliation reports, jump through a couple of things that we have seen that you might want to keep in thought as you're resolving any things that come up while you're doing that CAM at reconciliation. Then we're going to show you how to set up cloning for CAM and a few other things around that you may have to adjust for. And then we're going to share some helpful resources for you at the end. So we've worked to pull together some key metrics for everyone as you go through the budget planning session. And there are dozens of factors that could change this for anyone, but these are the high level pressures on the economics of CAM reconciliation that we thought we should just highlight for you all. So in case you are looking for some stats, these are a few stats that you can go to. Obviously, the CPI index has some profound impact on on inflation and other costs. So we have provided both the US and Canada's CPI. Commercial real estate insurance is continuing to go up. So you can see that just last quarter of 2025, it went up 3.8% for the quarter, 5.3% in Q1. So it is something that everyone needs to keep an eye on as they are making their projections for the following year. Property taxes vary wildly from state to state, district to district. So you are going to need to look at your very specific situations to see how you may be impacted. But in some cases, there have been double-digit year-over-year increases. So it is something to keep an eye on. So major CAM cost drivers, inflation, electricity is projected to be 3 to 5% higher. And contracted services could be going up 4 to 6%. And insurance also has shown some double-digit increases over the years. So another thing to watch for. All right, Jennifer.
So as you see here, each of the N's is a triple net lease standing for a specific expense that the tenant will pay their portion of. Most of you are familiar with this, that all of the tenants pay the base rent. And then depending on the lease, they may only pay for one expense, two expenses, or all three of them. The first N typically stands for real estate taxes, which is very common for a tenant to pay even on a ground lease. The next is insurance. And for instance, the general liability insurance that the landlord pays for the building. It'll be stated in the lease that this is a cost that they share and is typically it's an expense that they will be paid by the tenant. And then the last is common area maintenance, CAM, operating expenses. It's known by a lot of different phrases, but this is where it's really important to know what the tenant will and will not pay for in their lease. This is part of the negotiating factors for many tenants and landlords, and most large corporations have specific items that they will and they will not pay for. And all of that should be clearly stated in your leases. So next page,
I'm getting there.
Jerry, is how to calculate out those pro rata shares for the leases. So each of the tenants pay their pro rata share of the building or the property. And this is the portion of the building that they are renting. So this is done by calculating the tenant's rentable square footage of their unit by the rentable square footage of the building. So we made this graphic so you can see how we calculate it out. And this is easy when you have one tenant that is renting an entire building, obviously. But when you have multiple tenants in a building, you need to be able to separate out their share of the expenses and invoice them accordingly. So in the Stratafolio, these accounts are calculated for you. So there's no need to reinvent the wheel.
And I should mention, I know we've had a couple of questions already about this. We are recording this. We will share with you after the fact the entire recording, the other recordings that Jennifer has so graciously created, some supporting material. So you will get the complete package of everything that we are going through on this webinar.
Yep. So there are two parts of when you're preparing for CAM reconciliation, there's two parts of the operating expense tab. One is the invoices and then the actuals. The invoice section is for the amounts and income items being added to an invoice. The actual section is where we start to pull those expenses in to figure out the delta between the income and the expenses to reconcile your operating expenses. So we base CAM off of a calendar year. Sometimes leases can specifically state this, but the calendar year is the typical way that most taxes are calculated, as well as the closing of the books at the end of the year. So that is the reason why it's the industry standard. So we also send a lot of reminders at the end of the year. You probably have already received some of those. I hope you have, about CAM cloning that needs to be done at the end of the year so that you don't forget. And we will go over that in detail in a minute. The time periods to select, you will have different time periods to select when you do the CAM reconciliation, and then the pro rata share. Pro rata share is an automatically calculated in Stratafolio, and it's based on unit square footage versus the building square footage. So if you have multiple units, you need to be careful if you're modifying unit square footage because it can change the pro rata shares across the entire building. The reconcile button is on the actual section, and this will pop out an Excel spreadsheet with the CAM reconciliation report on page 1 and the breakdown on page 2 that we will show you in a minute. And the Excel sheet that comes out is modifiable if you need it to after it comes out of Stratafolio. You can hide the columns if they don't apply, change things if you need to, but please keep in mind that tab 1 and tab 2 don't talk to each other. So if you make changes, take that into consideration. And then the last one is to verify the actual amount actually collected. You do need to make sure in your QuickBooks that your AR matches how much was actually invoiced and you actually collected that amount. But we will go all of it into the actual CAM reconciliation on the next video that we created. It's a little walkthrough. Creating a CAM reconciliation out of Stratafolio is simple and can be done with one click after the setup is complete. So let's double check our setup and make sure everything is ready to go. So in here for this lease for the pharmacy store, we're going to go ahead and open up the OpEx tab. And the OpEx tab is separated into two different parts. One is the invoice part and the other one's the actual part over here on the right-hand side. Scrolling down, we're going to open up 2024 for our example so I can show you a full entire year of expenses and do a full year for CAM reconciliation. So in here is January of 24 to December of 24, and down when I've opened up those subcategories, I can see the categories and the subcategories, whether they're controllable or non-controllable or doesn't apply, the monthly invoice amount, annual amount per rentable square foot, annual invoice amount, as well as if there were any caps to this lease, the cap and the restrictions and how much not to exceed for that period would all be listed in here, as well as any other detailed notes that have been added. This last column is your OpEx income item. So what income item is going to get posted on your invoice for these specific expenses that you're passing along. So for instance, there are several of these that have the CAM income expense recovery. So when you create an invoice out of STRATAFOLIO, all of these will be combined into one full amount with that same income item listed. So that's how the invoice section works. In the actual section, we'll click on here, and this is going to tell us, it automatically sets up for the most current date. So this is showing us 2025. This is showing us the period estimate. So for this entire period of time for 2025, this is how much should be collected. Because this year is not over yet, this is how much has been invoiced so far. And then this is showing you the tenant's total portion, meaning all of the expenses inside of your QuickBooks come mapped in through here. Any of those CAM reimbursable expenses get mapped in and taken into account that this tenant is 57.14%. This is this tenant's total portion. How much is their portion of the expenses. When you subtract that out, you will see that at the current moment, if this was the case, we would owe them $4,174. Obviously, again, the year is not over, so we are going to actually switch to 2024 and go back a little bit. So now we see that this has been complete, the full invoice amount and then their tenant total portion. So this is saying that based off of this 57.14%, their cost per rentable square feet are 5.86, and they owe to us $6,868.76. Scrolling down here, you can see that these categories can be opened to show you the subcategories of those. So these are those same subcategories that were on the last page, how much was invoiced, and then also how much their portion is. Again, this is taking into account that their portion is 57.14%, their pro rata share. So if you scroll over a little bit farther, this does separate out January through December or whatever time period this is, of all of those expenses posted into your QuickBooks on a cash basis. So if you look in your QuickBooks in January 2024 for lawn care and landscaping, you will not see $85.71 though, because this is already taking into account the 57%. Scrolling down here, you can also expand the insurance and the taxes as well if you would like to. And then when it's time to make those CAM reconciliations, all you need to do is click on this reconcile button, and it exports an Excel document that I have already exported for you over here. And this is what that report looks like. So for the period of time from January to December 2024, the tenant's name is Pharmacy Store. The tenant's pro rata share of this building is 57.14%, which it is 20,000 out of the 35,000 rentable square footage. And then down here, you also have the assets, totals, rentable square footage, as well as the entity. So there are multiple assets in this entity, and therefore this tenant's pro rata share of the entire entity is really 31.5% if you need those calculations. Scrolling down a little bit more, these are those expenses those subcategories that we just listed, as well as those expenses for each of those subcategories. These are the building's actual expenses. If you open up your QuickBooks and run this QuickBooks report on a cash basis for lawn care and landscaping for this class, you should see that this is there was $1,820 in building actual expenses. That's tenant's share is 57.14%, so in which case the tenant's total portion is $1,039.99. They have been invoiced $1,200 for this period of year, and so technically their difference would be $160.01 for the lawn care and landscaping. However, when you total all of those up here, you see the building's actual expenses and then also what the tenant's total portion. So their portion of expenses is about 117,000. They paid 110,000. So their difference is 6,868. That information is also listed right here. So that information is in here very visibly to say how much the estimated amount was, as well the estimated amount, as well as how much the actual expenses were for per rentable square foot of the building. On page 2, these are all of that same information. This is separated out by the subcategories. That's and you can see month to month however much was posted again on a cash basis, already taking into consideration what the tenant's pro rata share is. If you do make any edits to any of these reports, this is in Excel, but if you make an edit here, it will not transfer over to the front page. So please keep that in mind. One thing you will want to double check when you are running these CAM reconciliations is that if the the invoice amount truly is this full amount, that according to the AR report, they actually paid the 110,240 or not. If not, then you will want to adjust that before you supply this information to the tenant.
Okay.
Okay. So as we have been doing this for a while, we've seen a few clients having a great system for this already built in place. However, as most of you know, the majority need some work and have no good real system in place at all. So these are some of the typical mistakes that we find. So posting transactions to the wrong accounts or classes, meaning mixing reimbursable and non-reimbursable expenses or putting it in the wrong class if that's the case. Um, not performing CAM reconciliations at all. You are leaving a lot of money on the table that could be recovered if you're not doing CAM reconciliations. Failing to charge CAM when permitted, such as during rent abatements or when the lease allows a certain expense that is not that you think is not covered. So we have seen the rent abatements many times. So just because rent is abated doesn't mean necessarily that the OpEx is abated. So you need to make sure that you're being very careful in your wording in your lease as well as what you're charging. So they're charging for expenses not stated in the lease. So these are costly mistakes that involve lawyers and such as like roof repairs or not typically recoverable. So especially for the large corporations, that is the case typically. So you want to be careful of that. And then using incorrect pro rata share calculations, either from the lease or due to past reconciliation errors. We know that lawyers tend to round on the leases and don't use exact numbers, which can cause issues. And also, the previous owner could have been doing the last year's reconciliations at a different pro rata share. All of those issues can cause headaches in the end, so you need to make sure that you're aware of those ahead of time. Relying on inconsistent or outdated lease terms. Save yourself time and money and just try to remain consistent with your leases and with the industry standard. And then completing CAM reconciliations late in the year. You need to make sure that you are following the rules as dedicated in your lease. Most leases say between 30 to 90 days that they have to be done and that the tenant will not pay for anything after that. So make sure you are paying attention to that and doing them in a timely manner.
And we actually do have a video on some common things to look for. However, given time constraints, we just wanted to make sure we got through the next thing, which is CAM cloning. When we send out the materials for this webinar, we will make sure to include the link that includes this video of common errors that you may encounter and what to look for with those.
One of the things I did want to cover over though was the classes. We cover that over in the video, but also we wanted to just kind of bring that up in here because that is a very typical one. Did you want to
All
cover
right.
this, Jerry, or do you want me to?
Yeah, go ahead.
Yeah, yeah. So we just want to make sure that you understand when our clients use classes, because the classes are built for the use of CRE, how exactly to post it to make sure that it is getting posted correctly and allocated correctly. So for this first example, real estate taxes. Those are typically done by parcel. And so sometimes that parcel includes multiple buildings. So you would use an entity level class or for a parcel in order to make sure that all of the expenses are placed in a reimbursable expense to prorata over all of the tenants involved in all of the units in the parcel. Um, for example, two, this is for Grease Trap, a unit level class in QuickBooks when mapped in STRATAFOLIO, we'll apply 100% of that reimbursable account expense to that tenant's CAM reconciliation. So grease trap cleanings are a great example for ones that typically only need to be applied to the restaurant. And if there's only one restaurant, then they should be paying 100% of that expense. So setting up a class for that is down to the unit level will get it to go just to that one tenant. And then landscaping or a separately metered electric bill that could be utilized for a building level class. So when that happens and you post it to a building level, the reimbursable expense gets applied to that class and all of the proratas again and all of the tenants in that building. So that is how you would use that situation. So depending on what the expense is and how your classes are set up will depend on how you use it, but that's a general overview. We also do have a a classes guide that goes into all of that in more detail if you need reference for any of that.
Yep. And it's at the very end in our packet of materials.
Yes. So this is going to give you, this is the very down and just the high level for how to clone your CAM to the new year. And in a minute, we'll show you a video, but basically you're going to go under the operations to the operating expenses. You can change the date filter if you need to. And then you're going to click on the checkbox for the tenant or tenants that you need to select. And then when the pop-up comes up, you're going to click on clone selected OpEx. And then we will show you this new thing as some of you may be looking at this going, what? Adding a percentage or dollar increase as needed. And then you check your errors and then you press select clone. The only thing is we want to make sure that when you refresh your lease, for the new operating period is going to be added. If you need to change any amounts that need to be changed for if you haven't added it by a percentage or a flat rate, then make sure that you update those in the Leases OpEx tab. Okay, so
All right.
go for it, Jerry. When it's time to clone over your CAM or operating expenses from one period to another, STRATAFOLIO has created a feature to help you clone those easily. On the left-hand side, you're going to go to your operations in the navigation bar and then click on operating expenses, and that'll open up the operating expense view. In here, you will see that these tables are the same as they are across our platform where you can select one or multi-select. And we even have a new feature for our OpEx status. If you click on here, you will see that there's two new features added, but this is missing next OpEx period, and that's where we want to go. This will show us that there are 10 leases out of all of our leases in the organization that do not have an OpEx period for the lease. So we are going to come into that, and this is those sorted leases. We are going to scroll down until we find the one that we want to do, which we actually wanted to use the box store. So I'm going to select that box. If you scroll over, you can see the information. So you can see all of the monthly amount at the current moment, as well as the OpEx per square foot and the annual amount for this period, which is in 2025. And this lease does not expire until 2027. So we need to have an OpEx period. So we're going to press this button, clone selected OpEx, and in here you will see the new changes that we've also made in here. This is saying that the one lease will be cloned. If you do have a lease marked in here for any reason, you will be able to download an Excel that will tell you what the issue is so that you can fix that. But scrolling down farther down, you will see that this is where things have changed this year. We've listened to our clients and added a new way to add a percentage or flat fee amount to each of the categories in the OpEx tab for a lease or a group of leases. So you can select a percentage you want to increase for any of the 4 categories, or alternatively, you can add a flat amount to any of the 4 categories as well. So you can do one or the other. So for my example, we are going to increase the insurance. Actually, we're going to increase the insurance $300 extra a month. So that will be added to this. And then we're also going to increase the CAM by 2.5%. So we're going to make it 2.5%, and we're going to leave the taxes alone. You do not have to have anything in here if you don't want to, but if you would like them to be added, you can. And you can see here that you can add either a percent or a dollar amount, but not both. So we are going to go ahead and press this clone button. And actually, I already have this lease open in another tab. So we're going to go into that lease. And in here, you can see that this OpEx tab has 7 in here. We're going to click on that. And then I'm also going to refresh this page. When I do that, you're going to see that there'll be the 26 operating expenses will have been created so that we can double check those and see the differences in those. So in here, you can see that the 2025 was $9,997. And here are the breakdown for those 3 different categories that had CAM added to them. And in here, you will see that our new amount is $10,416.25. And so opening up this period as well, you will see that our insurance has gone from $1,027 a month to $1,327, and our CAM has gone from $477.00 to $4,997.25 a month. So the zeros that have been added for repairs, maintenance, and trash and removal and utilities all stay at 0 because they are 0%. Nothing gets added to them if they are at a 0. Going back to our operating expenses tab, you will see that now this has 9 for the missing operating expenses. So if you click on that, then you would be able to see when you look at all leases in here, you'll be able to find your box store again if you want to do it that way. And here is my box store, and I'm going to go ahead and press confirmed lease ops. It has been cloned, and I'm sure that it is accurate. I verified it. It is good to go for this period.
All right. Moving
So
along.
hopefully
When it's time
everyone
to
loves our new
Oops, there we go.
our new updates. Yes.
All right. So a couple other things that you need to keep in mind are those caps. So sometimes those are found in the invoice section of the operating expense tab. You can edit those categories to cap it. We do allow for year over year or specific amounts, but when you clone that CAM from year to year, we'll calculate that amount for you. So if it was 5% or 3%, whatever is in that lease. We also see base years from time to time written into the leases, and base year is the opposite of cap. And if you have a lot of questions on this, we can address this. But it's when the CAM is included in the base rent based on the first year of the lease. Then that tenant pays CAM for anything above that amount in the following years. Stratafolio has a way to handle this, and Jennifer and the team have walked people through how to do this when you are export that data, so that you can make those changes on that output. We do have the ability also to break out controllable versus non-controllable categories. And this can help differentiate your reconciliation on those expenses that are beyond your control or not. And typically a non-controllable can be something like snow removal, since it varies from year to year. Controllable can be something that the landlord has control over, like perhaps parking lot maintenance. All of these things should be clearly stated in the lease. That, as Jennifer was mentioning, sometimes that pro rata share can sometimes be rounded, or a mezzanine was added and a tenant is grandfathered in. Whatever that scenario, you can edit in the lease where there's an override to that pro rata in case you need to do that. And remember that override is for the building square footage. So sometimes you'll have to take a look at the building and do some math to get your percentages to actually match up to what the lease says. Okay. Now it is time for Q&A. And the first question we have is, when you clone, are you cloning the past OpEx budget or the actuals of what QuickBooks has brought over?
Yes. So you are cloning the invoiced section. That is what you're cloning, not the actuals. The actuals is what's coming in from your QuickBooks. So when you are cloning it, you are cloning over the last operating expenses for the last OpEx period for that in the invoice section. So that is what you clone.
Mhm.
Does that make sense? Yep. Let me know if you have a follow-up on it. Yes. Did you have another question, Jerry?
I'm waiting for a couple people to finish
Oh,
typing.
they're finished typing. Oh, okay.
Yeah.
Um, yes. So what we also suggest though is when you have your OpEx done and you have your CAM reconciliation done, that's when you can budget for next year. So when you are, now that we have incorporated this new feature of adding in a certain amount, if you know that your real estate taxes are going to be increasing by a set amount for next year, you already have those bills in hand, so you know how much your real estate taxes are going to be next year, then you can put in the correct amount of increase. When you are adding in that camming that clone over with this new feature, you're just adding the increase. You're not adding the actual amount. It's just the increase from the last year. So if last year was $2,000 and this year you know it's going to be $2,200, you would just put in 200 to make sure that that is now the new amount monthly is 2,200.
And one of the questions that someone also has is, if they have not completed CAM reconciliation for 20, I guess I'm thinking about it, 2024,
Okay.
and now it's 2025, what steps should you take?
So if you haven't done the CAM reconciliation from last year, you will want to try to get that taken care of as soon as possible, since we are well over that required amount of time, and making sure that you're right for the upcoming year. That's the whole thing, is that the more you are can relate to the tenant, the more transparent you are with the tenant, the better off you are, and the better relations with the tenant. So you
Mhm.
want to make sure that you get that taken care of as soon as possible, so that not only can you figure out, okay, where were you for 2025, but also where you will be for 2026. So with those
Yeah.
CAM reconciliations, you can easily say, you could make those updates for the next year when you're doing those CAM cloning if you would like, or you can go in and update it later. You can always update it after
Mhm.
you clone it. However, please remember, if you make an invoice for January out of Stratafolio and you have not cloned your CAM yet, those will not be included in on your invoices. So you
Mhm.
must clone it over, even if you don't know what the increases are going to be yet. It is always recommended to clone it over now and then you can update it at a later date once you do know those amounts. But if you don't clone it, those amounts, those OpEx, that CAM and triple net will not be on those invoices created.
Yeah, very good
Can
reminder.
cannot stress that enough. Yeah.
Another question, what's the most efficient way to ensure that I'm properly recording CAM related expenses in QBO and that they're mapping correctly to Stratafolio?
Thank you. Good question. Yes. So in your chart of accounts, you should have set up reimbursable and non-reimbursable expense accounts. So if you have a repairs and maintenance that is CAM related, then you're going to post it to that CAM repair and maintenance account. If it's not CAM related and it's something that the owner is going to have to take because they can't pass it along to the tenant, it needs to be posted in a non-reimbursable, whatever naming situation you want to call it. But basically, you want to have it in those two separate accounts because inside of Stratafolio, we map those CAM related expense accounts to come through to your CAM reconciliation. So as long as you're paying attention when you're posting your expenses every month in your QuickBooks, then it'll flow accurately. And the
Mhm.
first year that you do CAM reconciliations, we do suggest that you verify everything is lined up correctly and that all of the mapping is all set up and everything else is exactly how it should be. After that, after the first year, if you're posting those expenses accurately to your QuickBooks, it's coming through accurately and there's nothing else you need to do except press that button. The first year will take a little bit of time just to make sure that everything is accurately mapped through correctly. But after the first year, one button and you are done. Yeah.
Yeah, and the other thing that we actually do address this in the video that we didn't show so that you know where to go look in QuickBooks to see if something is sitting in an overhead expense or in a kind of a category and it's not truly been categorized the right way. So definitely check out the videos that we're sending. All right. Another question, how do we enter CAM expenses for the first time? Does the entry have to match an existing expense item in QuickBooks?
So for the actuals, what is coming in is your information from your QuickBooks. So if you have not posted those expenses on a cash basis out of your QuickBooks, it's not coming through to Stratafolio. So in other words, if you have put in a bill at the end of the year, but you haven't paid it yet, that is not an actual expense. It's not an expense until next year when you pay it. That is what I mean by cash and accrual. We do cover that in the video as well. I do remember doing a cash and accrual example in there. So that is what's going to come through. If this is your first year doing CAM reconciliations and you have been doing it previously on an accrual basis, you may have some edits that may need to be made at the beginning of 2025, for instance, to deal with the 2025 cash and accrual issue if you were previously doing on accrual issue basis. It is an Excel, so you can make those adjustments, but just remember that the numbers that are coming in from your actual is in QuickBooks. So if it's not posted in QuickBooks, it's not going to show up on your CAM reconciliation.
And to further elaborate on that, if the expense item doesn't currently exist in QuickBooks, that will also need to be created.
Correct. And during your onboarding, we should have helped you create those accounts or what have you to come through in those subcategories. So you can have multiple QuickBooks accounts that go to one subcategory, but you cannot have multiple subcategories in one QuickBooks account. Meaning if you post something in the HVAC subcategory in your, pardon me, HVAC QuickBooks account, expense account, it's going to either go to a subcategory that we created for you that says HVAC if you wanted it that way, or repairs and maintenance or something like that. But we can't, if you have a repairs and maintenance QuickBooks account, we can't pull out those separate transactions that are HVAC related and other related.
Yeah, and we have a comment too that I wanted to address as well, that if you have added a new account in QuickBooks, but you haven't mapped it, that is also something that you'll want to double check. So if you are ever seeing that red or pinkish banner across the top and it says there is an account that's not mapped, you will want to take care of that before you complete your CAM reconciliation, just in case it is CAM related.
Absolutely. And that's again one of those that's in the video that we ran out of time for this on. But it is in there of not only you need to add it to your leases
Mhm.
and to all of the lease periods that that pertains to, but also that you need to map it to the CAM subcategory to make it to talk to each other. You have to do both. Mhm.
And we have another question. How
All
is
right.
the final balance amount of the CAM reconciliation displayed in QBO?
I'm sorry, can you read it one more time? Just want to make sure I understand.
Yeah, how is the final balance amount of the CAM reconciliation displayed in QBO?
Oh, so I think what you're are asking is once you have that CAM reconciliation report that is done, then what you will do is you will create an invoice or a credit memo for the difference. We do not automatically create those invoices for you because there could be some adjustments that you need to make and everything else. But we do have directions on a one-time invoice, how to make those inside of Stratafolio. If it is a credit memo, meaning that you owe them money, you will have to make the credit memo inside of QuickBooks and then apply it to their next invoice or what have you for that.
Mhm.
I believe that's what you were referring to, but let me know if it's something else. Yeah.
So if you find a transaction in QBO that were incorrectly categorized and you correct them,
Yep.
what will the actual OpEx and Stratafolio update?
Yes. Depending on please remember that it depends on if you're a QuickBooks Online or desktop. If you are on desktop, it will obviously doesn't refresh until after you have synced the account again and then given it a minute or two to refresh. But you always have to refresh your page inside of Stratafolio. So just remember that if you've made changes in your QuickBooks and then you want to check it, refresh your page and see if it's updated depending on a lot of factors, your internet speed, a whole bunch of different things, is pretty quick to see the difference. Yes, absolutely. But again, remember it's on a cash basis.
Mhm. All right.
Yeah,
Well, we had a lot of really good questions. We're getting to
yeah,
the end of the time. I did want to share a couple of things. So just a recap. So this is the new clone operating expense process that you have. So thank you everyone for your feedback. We really do listen. We appreciate all of the feedback. We love all of the suggestions you all give, and so hopefully this will make your CAM reconciliation go even faster next year or for 2026. The other thing is we have continued to provide more enhancements to our AI assistant, and we want you to keep encouraging people to use our AI assistant. It's getting smarter all the time, knows where you're at, asking more questions when you are on a certain page. And so we want to thank you for everyone who's using it. And when it does provide you an answer that is not answering your question, please feel free to say it's not answering my question. Go through the steps, rate it, and it will open up a ticket for you if you ask it to. And then we will respond to that ticket. And we appreciate people going through that process because it helps us categorize the things that people have issues with or where there is some sort of need for us to take a look at the product. So thank you for all your help on that. And some final reminders, you can access our knowledge base there and access our AI assistant. And if you need help with some more onboarding stuff, please reach out. We have several support packages that we can help you with. And lastly, let us know how we did. Please provide some feedback. We would enjoy to hear what you liked, what you would like to see more of. So thank you all for attending our webinar on CAM and CAM cloning. We hope you found this very informative and that this task is not as difficult as you thought it might be. And here are a list of the very many resources that we are going to be sharing with you after this is done recording. The recording comes together. So as always, you can check out YouTube for the videos. They also get inserted into our knowledge base as well, which our AI assistant works from. We also have some guides that, if you haven't seen them, we have several brand new guides. We have a navigation and interface guide, and we now have two companions that we are going to be sharing as well: the OpEx CAM reconciliation companion and the cloning companion. And if you're fairly new to real estate and trying to figure out CAM, we also have the foundations of CAM. There's a sample CAM letter out there as well. So if you're struggling, you need something to start from what we have. You can make it your own. If you are questioning how you have things set up in your chart of accounts and just need a little bit of guidance about the best way to organize things, check out this chart of accounts. It was built after reviewing thousands of charts of accounts. So there's a best practice out there that you can definitely learn from. And then we do have some information about mapping accounts in STRATAFOLIO as well. So with that said, this is the best practice chart of accounts that you will have access to as well. With that said, we wish everyone a happy Thanksgiving. We appreciate all of you, and we hope that 2026 is a very great year for all of you. Take care.
Thanks, everybody.